Okay, well, let's move on now and bring on board the management of Galaxy Surfactants. We are going to talk about a variety of factors actually with Galaxy Surfactants. Remember that it is essentially a supplier to some of the most common household names that you and I use, from detergents to soaps, etc. So we'll analyze the demand factors, but we'll also analyze if they themselves are facing input cost pressures. Mr. Shekhar, the chairman of Galaxy Surfactants, now joins us on the show. Mr. Shekhar, thank you so much for taking out time. So to start with, let's talk about how are you seeing demand pick up from a variety of the clients you have. You have clients in the personal and home care products, skin care, oral care, etc. I'm sure, post that first wave, maybe perhaps post that second wave as well, there was that increase in demand, for these products. So how did that reflect for Galaxy Surfactants? What are you seeing now?
I should say that throughout the last 12 to 18 months, demand has been pretty robust across various categories and sectors, and particularly with respect to the requirements on cleaning and hygiene, and also home care as well as fabric care. Though beauty care was a little muted during the beginning of the COVID period, at least for the last 1 year, demand on the beauty care side also has been pretty strong and pretty robust. And this is the case across India as well as the advanced countries, including Europe and USA. However, we are passing through certain testing times with respect to supply chain and responding to this demand. I think we have a situation never before seen with respect to supply chain challenges across the world. International logistics is highly now disrupted, volatile. There is tremendous amount of delays in arrival of raw materials and reaching of finished products to customers, in terms of detention, in terms of delays. So there is a huge supply chain challenge, and there is no sign of it abating or even getting mitigated in the next few months or so. So that is the situation we are in. So on the one side, demand, a very, very robust demand, and on the other side, a challenged supply chain situation across the world.
Mr. Shekhar, has this supply chain constraints that we are witnessing hampered your ability to meet and cater to all of that increasing demand in any manner? And I'd like to club in one more question. Because of this, what sort of an increase in cost have you seen?
Okay, so let me take the first question. Certainly, this supply chain situation has significantly impacted us in terms of our service to customers, or even the opportunity to meet demand in various categories and sectors and countries. The second is there has been a huge impact with respect to cost. Raw material costs have surged almost to double the number with respect to vis-a-vis last year. One. Number two, international cargo rates have jumped to never before seen heights. We have seen freight rates jump by a factor of 3, 4, and 500%. Container costs have again surged. So all this has resulted in a significant increase in cost with respect to movement of goods, with respect to incoming cargo, with respect to outgoing cargo. And not only this, but it has also, what is of more concern is the availability, which is resulting in delays. So two things. Our ability to service this demand has been impacted. And number two, costs have significantly gone on the higher side.
Yeah, and that's exactly what I wanted to talk about, costs, given that palm oil prices, other raw material prices as well, continue to be on the rise. And not only this, there was a brokerage report that we were going through just, a few days back, which said that prices of your offerings are also making it to highs. So how much of a pass-through of the input cost pressures was already done? How much price hikes did you already take? And how much do you think could be in the offing as well?
See, we would certainly, we are certainly taking steps to pass it on, but there is always a time lag. It doesn't happen overnight. So price increases don't happen overnight. We have to take it in a gradual fashion so that we don't create any disturbance or shock to our customers. But however, we are certain that we will take up the costs, take up the prices in line with the costs over a period of time.
Okay. So you've managed to maintain your Ebitda margins above 15% for the first quarter. And then, of course, it dipped further. What is it that you can expect as the ballpark range for FY22?
See, we would aspire to maintain it in terms of EBITDA per ton. We have, we don't look at percentages. We've always given a guidance that our EBITDA per ton will be in the region of 15,000 to 17,000 rupees per ton. This is what we would like and expect to maintain as we go forward. And we hope to do that. I think the only challenge is the cost increases or cost surges that we have been talking about, which hopefully will remain over the short term and would get addressed over a period of time.
So typically when commodity prices they go higher, your working capital requirement will also go higher. Is your bottom line more like a cost plus business where top line goes higher, automatic translation will happen to bottom line? I'm just trying to understand for your shareholders, how does it work? Because commodity prices goes higher, you're able to pass it on. Because commodity turnover is going higher, if you are working on cost plus, that means profitability will go higher.
No. Our selling prices don't go in proportion to raw material price hikes. What is important for us is that the value addition is what we seek to maintain it constant per ton of products. So when the prices go high and the selling prices go high, the revenue goes high, but then the value or the value addition or the contribution as a percentage of the revenue can go down and vice versa. So we don't look at prices going here and there, and that doesn't impact the value addition per ton. So what we are always bothered about is volumes, the volumes growth, so that we grow ahead of the market in terms of volume growth, and how we ensure that we maintain our value addition per metric ton in terms of whatever we have indicated as 15 to 17,000 rupees per metric ton. Yeah. So the percentage of EBITDA, what was possibly 16%, could go down because the raw material prices have increased. And in line with the raw material prices, the selling prices have increased. So the top line would increase, but not necessarily the EBITDA as a percentage of the top line.
Fair point. You got clarity on that. So just to wrap it up, now there are two ways in companies they get into raw material contracts. Long term, which are 6 to 1 year, or you don't get into any contracts, you buy from the spot market. A lot of companies we've spoken to, they're telling me the following, that we've learned that the importance of hedging the raw material cost. Are you thinking on same lines that for next 1 or 2 years, you want to lock your commodity raw material contracts?
So, necessarily in these volatile times, the raw material contracts are at best valid for maybe about 3 months. I think no one enters into a very, very long-term contract, 6 months or 1 yearly contract. Sometimes the contracts can be as short as a month or 2 months because the times are volatile and everything is uncertain and unpredictable. So we have to go with the times, and the entire chain from our vendors to our customers, I think certainly understands this uncertainty and volatility during these times. So in a way, we live by the day, and that is what it has been, for, at least for the last maybe 6 months or so. Hopefully, let us all of us hope that we would be able to live not just in the day, but by a longer period, at least in the near term. So that's what we would all like to hope and pray for with respect to this supply chain situation. Yeah.
So much for joining us this morning then on the market, and explaining to us the pressures that you are as well facing right now. Undoubtedly, it's something that I guess a lot of companies are facing, the supply chain issues. It's unfortunately all pervasive as well. Thanks once again.
Thank
and on
you.
that
Thank
note,
you
we're
very
going to take a very short break on the show. But when we return, Anil Gupta of KEI Industries will be joining us. Stay tuned for that conversation.